Hey everyone, welcome back to the channel. I'm your host Ian, and today we're diving into the Toronto housing bubble from 1986 to 1989. This was a time of wild price swings, fueled by big policy changes and a wave of optimism. But it all came crashing down in a way that reshaped how people viewed property for years. First off, some context on what was happening in Canada during the mid 1980s. The economy was buzzing after recovering from the early 80s recession. Unemployment was low, around 7 to 8% in Ontario, and inflation was under control at about 4 to 5%. Still pretty high, but under control compared to what we were going through at the time. People felt confident. Women were entering the workforce in bigger numbers, creating more dual income households without kids, or what they called dinks back then. And credit was easy to get, with low interest rates making mortgages accessible. 5-year fixed rate hovered around 10 to 11% early on, which felt manageable to people. And real estate, well, it was seen as the ultimate safe bet yet again, a hedge against stock market's ups and downs or inflation eating away at savings. Baby boomers were investing heavily, building portfolios, flipping properties, and treating housing like a surefire way to build their wealth in their retirement. Now, enter the key spark. The Canadian Immigrant Investor Program, or the IIP, launched by the federal government in 1986. This was basically a golden visa aimed at attracting wealthy business people from abroad to boost the economy. To qualify, you needed a net worth of at least $800,000, or about $1.7 million in today's dollars. And you had to give the government a $400,000 interest-free loan for 5 years. In return, though, you and your family got permanent residency right away. No strings attached beyond that. It was hugely popular, especially with folks from Hong Kong and China who were worried about the 1997 handover to China and wanted a stable place to park their money and their families. While many headed to Vancouver, a good chunk also flowed into Toronto, snapping up homes and condos. Now, this influx supercharged demand, especially in upscale areas. Couple this with factors like minimal oversight on lending. Banks were handing out mortgages with loose standards, encouraging speculation, and things started to go in a bit of an interesting direction. There weren't strict stress tests or foreign buyer taxes like we do now have today. It was a freer market. Developers ramped up condo projects with 18,000 new units hitting Toronto, aimed at first-time buyers and investors. Artificial scarcity kicked in as people held off selling, expecting even higher prices. All of this created a frenzy where bidding wars became the norm. Let's take a look at the data to see how explosive this actually got. In 1985, the average home price in the GTA was around $100,000. By 1986, it climbed to about $115,000. Nothing crazy. Then things really started to accelerate though. 150,000 in 1987, jumping to 230,000 in 1988, and peaking at roughly 280,000 in 1989. That's close to a 190% increase in just 3 to 4 years. The sharpest spike Toronto had ever seen. Looking at it in another way, a detached house that cost $150,000 in 1987 might fetch double that by 1989. Sales volumes were through the roof too, with the Toronto Real Estate Board reporting record transactions. Pre-bubble in the early mid-1980s, the mood was pure optimism. Housing wasn't just shelter, it was an investment that everyone believed would keep appreciating forever. Newspapers and folks at dinner parties talked about it as a can't-lose game once again. Baby boomers in particular saw properties as a rock-solid way of preserving wealth amid volatile stocks. Buying real estate, investing in real estate just felt glamorous in the time. Credit cards were new and exciting, and owning multiple properties felt aspirational. Speculators piled in, buying pre-construction condos and flipping them for quick profits, because why not? Not many were predicting a crash though, and it felt like a new era of endless growth, driven by Toronto's rising status as a global city. But as prices soared during the bubble in the 1987 to 1989 era, sentiment started shifting a little bit. Some celebrated the wealth creation, but others grew frustrated and fearful. A CBC report from 1988 called the market a out of control situation. Families needed $67,000 annual income just to afford a 3-bedroom in the suburbs, way higher than in Montreal or Halifax. The Globe and Mail blamed yuppies or foreign money for the surge. and there was growing worry about unaffordability pushing out locals. Did people fear a bubble? Well, yeah, some did. Realtors and economists whispered about overvaluation, and buyers complained loudly that prices were detaching from wages. But plenty dismissed it, thinking Toronto's boom was permanent, like the new normal. Speculation ruled, and people kept buying, betting more and more on these gains. Then, of course, the bubble did burst in the summer of 1989, and sentiment turned dark real fast. The Bank of Canada hiked rates to fight inflation. 5-year fixed mortgages hit 13% by 1990. A recession hit with unemployment climbing to over 10% in Ontario. Immigration slowed. Government debt led to measures like the new GST in 1991, and the US downturn spilled over. Oversupply suddenly crushed the market. All those pre-built condos flooded in, but demand evaporated. Prices didn't plummet overnight. It was a slow drain, dropping about 27 to 35% over 7 years. So what's the lesson we can pull from this in today's market? Bubbles often stem from easy money, high demand for policies like the IIP, and the unchecked optimism. But they burst when rates rise, recessions hit, or supply overwhelms. Toronto recovered by the late 1990s, proving markets are cyclical and it does come back, but you still have to weather the storm. Thanks for joining me, and remember, knowledge is your best tool in any market. Catch you on the next one.